Hey, welcome to the channel. My name is Josh. For those of you who don't know who I am, we're going to talk about stop losses and how to manage our trades. All right, before we get started, I want to invite you out to our virtual trading chat room. Every single day we go live. It's in the description box, the very first link. It'll take you to our Discord server, and that's where we post each and every day the link to go live. Now, we are talking about stop losses and profit targets. And this is very critical and very important, especially when we get started. Let's look at Tesla, for example. Now, those of you who've been following me for a while, I'm really big into buy zones and sell zones, or just learning where supply and demand is in the market. I also am I believe in the 50% retracement. It makes sense because if we get a 50% coupon in the mail, it's a good deal at that point. Everybody likes 50% off when you're buying something, right? Including stocks. So check this out. We're going to use our Fibonacci retracement tool just to find that 50% level, just to know where we're at. So from the pivot high, which would be at the bottom of this candle here, we'll measure to the top of the pivot. Okay, now this brings us to the 50%. The 50% I have highlighted pink. So let's go ahead. I'm going to have a price line, and we will color it pink. That's usually the color I have it on the 50%. And then we'll just get rid of the Fibonacci tool itself. Okay, so this brings us to this price point of $607 of Tesla. So we have this nice move up, almost like an S pattern of some sort. You can see that it kind of pulls back to the original 50% move before making another uptick. So we can also tell, because of this reversal pattern here, we have this, slightly indecision bar, definitely more bearish than bullish, but we do get that retracement up this bearish bar with the bulls fighting back. So this would help us deem that this could possibly be a buy zone for the stock, okay? And generally the way I do it is by capturing the pattern and figuring it out. I would take this up to the gap fill level, because sometimes that's where the stock will stop and then continue further. So knowing that this is our buy level, we found the 50% or the area. Sometimes it's not perfect. There's obviously fear and greed in the market. So everybody doesn't just stop at one price point. Sometimes there's extra fear and extra greed in the market. So if there's more greed, we would get bought up quicker. If there was a little bit more fear in the stock, then they would continue selling. So that's why we got to give it a range. If we just use one line, like a support or resistance line, in many cases, when I was first starting out, it would pass that line. I would stick to my rules and I would stop out of the trade, and then it would rip up to the next profit, or rip up to my profit target, or what I expected the move to happen. So I found it to be more useful using an area, okay, which I call a zone, using the area as potential for either buys or a sell, paying attention to price action. So I'm going to go ahead and highlight it as I usually do. Okay, so now let's talk not necessarily about the price action, but let's talk about how we would manage this trade. So we found our 50%. The stock's obviously going up. It's ripping to new highs. Tesla seems to just move in one direction, right? It just continues to push all the time. As it's pulling back and we're looking for an entry, and we have our 50% drawn out, let's say we take our entry at the beginning. Let's say we are the greedy person and we're just wanting to do whatever it takes to get into the trade. So what I like to do, and the way I was taught, is taking a 1 to 2% stop loss. Now, I say a 1%, and I don't want this to be misunderstood. So when we talk about a 1% stop loss, I'm not talking about 1% stop loss on your entire account value, as some other teachers or mentors will explain. I'm talking about 1% on the dollar value you are invested in. So if we were to take the dip buy right at the 50% level, and we follow this down, that would be a 0.73%, almost a 1% stop loss. Now, depending on how much money you have invested, for example, what I want you to do, and we were talking about this in the live stream today, I want you to figure out how much you're risking in this trade in order for you to then take your position, or then size into your position. So if we're willing to take a 2% stop loss, okay, so down here at $597.16. We would be risking about $12 in this particular trade. So if you were to buy one share, that means you're risking $12. If you buy two shares, you can do the math, $24. So what I want you to do is, before getting into a trade, figure out how much you're willing to risk and actually how much you're willing to lose. When I talk to people and we're discussing trades, and let's say they were going to buy, let's say for simple math, we were risking $10 in this trade. I will see people take a bigger position, like 7 shares or something like that. And let's say for a beginner, that would be a big position for a beginner first starting out. You should not be risking any more than $5 or $10 per trade. Okay, so if you're getting into a position and you're risking $10 and you take 7 shares, you're risking $70. Just always put it in perspective. It might not seem like a lot when we're trading, because you see people making $3 grand, $5 grand, $6 grand a day and more. The potential of the market's unlimited, right? So I want you to put it in perspective. Let's use Chipotle, for example. If you risk $70, you could buy potentially 7 Chipotle burritos. Okay, that might be half of your phone bill. That's maybe 2 car fill-ups with gas. So you're getting my point. Maybe just risk maybe $12, one Chipotle burrito for getting into the trade, especially starting out, would be a lot more beneficial. Now, obviously, if you're risking only 1%, so I say 1 to 2%, when you're first starting out, I suggest you do a 2% stop loss. This gives the stock plenty of room to move. We don't want to be stopped out. You get stopped out and then it reaches your target, and then you're battling with emotions and you wished you would have stayed in. And the next time what will happen is you'll backhold the stock, it continues to sell off, and you'll lose more money than what you were anticipating. So starting out, 1 to 2% for your stop loss. If you take a 2%, that just means, make sure you do the math on it, but that just means you take a smaller position because you're risking more in the trade. If you are taking a bigger position, maybe it's 2 shares, maybe then you're only willing to risk a 1% stop loss at that point, which would be like $5. Okay, so then you're still, if you're risking if you're risking $10 and you buy 1 share, you're risking $10. If you're risking 2 shares, if you get in with 2 shares and you're risking $5, you're still only risking $10. Does that make sense? So that's how we want to control our stop losses. When we find out where our buy zones are or sell zones are at, we'll get into sell zones, but our buy zones, when we go to take that position and we go to buy in at that 50% retracement, we go to buy in on a pullback of some sort, okay? We want to know where we're willing to lose or what we're willing to risk in that particular trade. We want to know that we stick to our rule. If it cruises past the 1%, we just cut our loss and we call it a day, okay? So if you were to get into this position and you risked 2% in the trade, so $12, and then the high to the previous peak is all the way up to $38. So you're risking roughly $12, $10 to make $30 to $35 to $40 in the trade, okay, with 1 share. So that's how you would want to structure the trade. Now, how do you manage a trade? We were talking about this in the chat room, and I just wanted to briefly go over. So if we're using 30-minute candles, the first candle, let's say you get into the trade here. As it continues to push up, here's our new support and our new resistance where this consolidation is, okay? This proves to us that there is a support here, and there's buyers that are the stock's being held up. So our next zone in the trade, using the smaller time frame, for example, would be roughly right around this price point. Okay, this would be like a buy area, and it showed to hold true because today we got down into the dip buy. It filled the gap on the chart, and it takes off. So if you bought here and you are risking 1% from your entry, that means your risk would be down here, okay? This is where your risk would be. Now, once the bar closes at the top, you're going to go ahead and move your stop loss underneath the previous low, so this tail candle. So now your stop loss can be moved up all the way to here. Now you're virtually break even in the trade. You might take a very small loss, and if you're to do that, the next candle that closes, as long as the body closes above the entire range candle, you can move your stop loss up to this point now, okay? So now you move your stop right here. This candle never tags out. The wick never comes down. and get you out of the trade. It continues up higher, and all you do is you move your stop loss up again. As the next candle closes, now this one doesn't close, I would still keep this as my stop right here. So now we're making money in the trade no matter what. I would go ahead and move the stop loss up to the next candle that breaks the high of the previous candle. Now, you would have been in the trade, you'd be in money, it double tops here, comes down, and now tags you out. So in this particular trade, you are only risking a 1% at this time, so you are risking roughly $6 in the trade to make $20. Okay, so it's like it would be almost a 1-to-4 ratio. Okay, that would be a terrific trade by following your stop loss up. That's how you manage the trades. Don't let them come back on you. Go ahead and take profit. Now, it tagged us out. We're in profit. We got good cushion on the day. It's wonderful. If you were in with one share, you would have made $20 on this particular trade. Okay, now let's say it starts building another pattern. There is no reason why, because this is a new support. Okay, new support. If it starts coming back down, there's no reason why you can't get back into the position and then let it continue further. Okay, I hope this helped. Give us a thumbs up on the video. Subscribe to the channel. We're brand new to YouTube. Share, comment, do all the stuff that helps the algorithm of YouTube and helps me. And I hope that I can see you in the Discord chat. Remember, first link in the description box below to come watch us live. And you can ask a bunch of questions, and I get to actually interact with you, figure out what kind of trader you are, and hopefully help you become profitable in the market. I'll see you there.